Just look around and you will see every reason to worry, but the mainstream media will tell you otherwise. In fact, they have 7 stock picks to buy today that Jim Cramer said would be perfect in your portfolio. The only trouble is that, where are the incentives? Who stands to benefit from these recommendations? Let us not forget what happened in 2007. You came here for the truth, so let me unveil that for you. Today we are going to look at the warning signals that are flashing red. I've been talking about a few of these recently and I want to bring them to you in one video. I think it's so important to be covering all of the different indicators, not looking at 1 or 2 or 10 or 20, but looking at hundreds and hundreds of indicators and try to be able to understand what is going on behind the scenes. We only get little bits and pieces, so we need to take all those and put that puzzle together. Now, I want to begin with this article here. U.S. insiders dump $10 billion of stock in cautionary signal. It is important to understand what the insiders are doing in any market. But let's face it, $10 billion, it's not a big number in comparison to the entire stock market. I understand that. It is very, very clear. But these insiders, they only have so much money, and they're selling $10 billion worth just in a short period of time here, and we need to pay attention to what they do because they're in the know. Think the rally in U.S. stocks might be about to end? Corporate insiders apparently do. Executives sold more than $10 billion worth of stock in August. That's the most since November. One cautionary sign for U.S. stocks is that corporate insiders have accelerated their selling of U.S. equities. Now, check this next part, okay? They've dedicated record amounts of shareholder money to buybacks, but aren't doing the same with their own. That suggests companies aren't buying stocks because they're cheap. Now, you need to let that sink in for a second. So all these insiders, they've been selling. I'm going to show you a chart here in a second. All the insiders are selling. At the same time, they're using shareholder money, buying back shares of their own corporations, pushing them up. And if we dig a layer deeper, as I always suggest everybody does, it's not so black and white. Go in another layer deeper and you find that these individuals tend to wait for those buybacks to occur, the stock gets pushed up, and then they sell. Now that, as far as I'm concerned, is something that we should be, the warning signal should be flashing red in everybody's face. We should be understanding what that means. But of course, you're going to be offered 7 stocks to buy today. Add to your positions of Apple, add to your positions of Amazon. Don't worry, the market's safe, the market's safe. And it might be. In fact, stocks may rise. We've got enough quantitative easing out there to push these markets up higher. I'm not denying that. But you have to be willing to take the losses when they come. That's the difference. You can ride the wave all the way up, but will you know when to sell? The institutional investors do not. The hedge funds do not. The pension funds do not. But you apparently do. It's possible. Certainly possible. Selling season. Executives cashed out over $10 billion of shares in August. So you could see this right here. Essentially the same amount in August as we saw back in November. But what I can tell here is, in general, since the beginning of the year, more and more and more insiders are selling. Regardless, the amount is quite high when you look at all of this. As I said, not in comparison to the total value of the stock market. I know there's already 3 comments on this video talking about how $10 billion isn't a lot. But look at it for what it is. The insiders, it's a small group of people, and they've sold off $10 billion in 1 month. Add this all up, you have Billions and billions and billions of dollars being sold off by the people in the know. At the same time, they're using shareholder money to buy back the shares, pushing the stocks up. Then they cash out a little bit at a time. They don't want to freak anybody out. They know that the crisis isn't going on today or tomorrow. Okay, we have enough time. I'm taking my profits here. This is a good opportunity. Let's push the stock up. I'll sell a bit. Every time we're going to do this, let's say 7 times this year. All right, each time I'm going to sell off. And then I'll hold a bunch in there and I'll let it ride. And that's what they do. Remember, these are the insiders. We're talking about the people in the highest positions of these corporations that are achieving trillion-dollar market caps. They know what's going on. Never mind trying to predict the future. How about predicting the present? On Wednesday, the Fed upgraded the U.S. growth outlook from solid to strong. Now that right there, it gives me so much confidence because we want the Federal Reserve, the money printers, to tell us that the economy is strong. Well, it's strong. But what about those interest rates? You increase them by such a fractional amount a couple times a year, and yet you're telling me it's strong? No. No, you just lied. All right. Copper is telling us not to worry a bit. The metal is telling us to panic. Since the first week of June, the copper price went into a steep decline. In the year to date, the metal has deflated close to 18%. That is going beyond just one Chilean strike being deferred or a Chinese investor club breaking up. The metal is giving Western investors a clear signal to sell risk assets or at least reduce their portfolio weighting. Now, you need to understand what's going on here with copper because this is a leading indicator of the markets, the economies, because it is an extremely important metal. It's used in industry, and China, for one, just consumes it just constantly. We see that. But what is going to happen in the future here, in the near future, with copper, because it's already declined, and what does that tell us for the economies around the world, right? So that's what this article is about. This is one of the more important indicators. A lot of people say that this is a leading indicator for a stock market crash. I'm not saying that necessarily, but that is a general indicator, all right? All right, now looking at this, it's basically talking more in detail about the copper price. I'll show you the chart here, just showing how far this has declined from June until today. It's quite a bit. It is quite significant. And this was also a leading indicator, leading up into the financial crisis as well. Raging bull. Goldman bull bear indicator at the highest since 1969 flashes red. And like so many others, we saw this here just before 2008, just before 2000, and just before all of these other recessions previous to those. Okay, it happens every time. It's happening again. In fact, it's gone beyond 2008 and 2000. But hey, nobody cares. Nobody cares. But if you watch this video and you're this far in, maybe you do. Maybe you want to know what's going on. Maybe you're not going to necessarily sell anything, but you just want to know. And that's wise. Just knowing. Then you could be responsible for your actions instead of being ignorant like some others. Pain of missing FANG. Without the 5, S&P 500's 3% August gain would have dwindled to 1.8%. So those FANG stocks clearly are leading the charge, and there's no doubt about that. I've seen statistics. If you take away the top 10 stocks in the S&P 500, it would actually be negative in 2018. I haven't seen the most recent numbers on that, but it wouldn't surprise me because this is the way it goes. We can see the constant and never-ending push towards just a few stocks. That's never good. It's truly never good. All right. It's tempting to think the global economy is riding out the turmoil of all the trade issues. Tempting, but mistaken. Look closely. The slowdown has begun. This is Bloomberg saying this. Surprising. Take trade volumes. It's been extraordinarily unusual for the momentum of global commerce to head anywhere but up in recent decades. The only notable occasions when the World Trade Monitor compiled by the CPB, Netherlands Bureau for Economic Policy Analysis, had turned down in a sustained way since 2000 have been on the eve of 2001 and 2008 recessions, and during the 2015 commodity slump. All right? They're talking about a slowdown. Look at these charts. Past the peak, rolling 3-month trade volumes are already in decline, a rare situation in recent decades. So you saw that 2001, 2008, and then just briefly in the 2015 commodity slump. We're seeing it again today. Does it mean necessarily that this is the reason why stocks are going to crash? No. It's probably not going to crash today. It's probably not going to crash tomorrow. And we're talking about US stocks. But look around the world. So much tension. There are countries right now that the US is considering entering. And I got to use my words carefully. Entering without permission to, let's just say, hey, maybe they'll do it from 30,000 feet in the air. Drop some love on that country. Add it to the list. Anyway, I'm going to move on. Boxer Rebellion, the global container ship order book is running at its lowest levels in years. I've been told by an insider in the very, very high position in the shipping industry years ago, he said this thing is going down. And this person is literally as high as it gets in the shipping industry. And they told me, business is slowing down and it's going to continue to slow down. And this was before all the issues going on with China and the US. Now, it worries me. It really does. Because this here isn't just, a little correction. This is a major, major change that's taken place. Global air freight and sea freight volumes declining here year over year. Over the last year, definitely has dropped quite a bit there. And ultimately, these tensions that going back and forth between the US, between China, is just one of them. Just one of them. Yes, it's a major one, but it's just one aspect. So, I'm going to leave it there. If you found the video informative, please give me a thumbs up. Keep your eyes on all of the indicators out there. Don't just look at one or two. Don't just look at 200-day moving averages and 50-day moving averages. There are thousands and thousands of indicators. I've tried to show you as many as I possibly can, piecing it all together and just giving you the knowledge. You decide what you want to do with it. I really don't care. I hope that you make the best decisions for yourself and your family, and that's all. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. And if you want the financial education you were not taught in schools, these 2 books have it all. When you read these books, you have everything you need to know to make your own investment decisions. And it's really interesting to take a look at these. You can do so at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.